Dividend investing, position trading.
Dividend investing.
Cut loss or hold?
Hold.
LeBron or Jordan?
Jordan.
Now or dito?
Dito.
10 million pesos earning 10% or 1 million pesos earning 100%?
10 million earning 10%.
Own less than 5 stocks or own more than 10 stocks?
Own more than 10 stocks.
Fundamentally sound stocks but are not moving or basura stocks with momentum?
Fundamental stocks.
Love or money?
Money.
Guys, we're in for another treat. Luis Limlingan is back. Superstar analyst from Regina Capital is here to share his insights on the market. If there's, I hope you guys will listen to what he will say because it's always filled with wisdom. So, Luis, 6 months na since we were doing these videos. How are you? How's everything?
Okay, it's been 6 months, no? And we've seen the impact of the pandemic so far and how it's affected markets. So I think in your series now, I'd like to help your audience and guests try to figure out what's the direction of the market in the next, again, 3, 6, or even 12 months.
Given that when we did our video somewhere around March and April, the market freshly dropped at that time. We saw it hit 4,000 plus at that time. Now, we are detached from that. We're 6 months away from that. But we're very, very far from the all-time high and we're already relatively far from the low. Given that hindi ka nakapasok nung malaking bagsak, what should people do right now?
It's a bit difficult, no? Earlier, probably there was a lot of overreaction. That's why we hit 4,000. Obviously, nobody expected this to happen and nobody knew what exactly was the correct way to react. Obviously, I think there was a bit of, overselling as far as the foreigners are coming. Now we're 6 months into the pandemic. We're still under lockdown, and people are trying to figure out what's the direction of the market. Now, obviously, there has been some recovery. We're close to 6,000. In fact, we climbed above 6,000. I think we're doing around 6,300, 6,400, that level. And now we've seen a bit of a sell-off. Now, to make people understand what's happening right now, let's look at the numbers or what's transpired. The earnings have come out and we've seen the effect. There's the GDP of the Philippines versus the rest of the world and of ASEAN 6. And if you look at the ASEAN 6 countries, we were actually the second worst performer next to Malaysia. I think it was on the higher end of the projection. Why are we actually falling more than these other economies? We're supposed to be growing 6% this year. Obviously, because of the pandemic, it's not going to happen. We're really dependent or domestically driven as a country by the Filipino consumer. In fact, 72% of household consumption contributes to GDP. In the US, it's fairly higher, or rather it is as high. It's around 67%. But you've seen that they've been able to manage the pandemic and they've isolated it per states. Whereas here, we're trapped in Metro Manila where a lot of the growth is happening outside. If you compare it against Korea in the next chart, it's 50% domestically driven. So you can see when we're locked down, we're really tied. And I think the other problem is that maybe the numbers aren't as bad as we think of it. And the reason why I make that guess is because a lot of the business right now is driven by the informal economy. Obviously, nakita mo nangyari, di ba? Like within your village, may nagkaka-food wars, di ba? Bibili ka dyan sa kaibigan mo para tulungan mo, di ba? Yung problem lang kasi, Marvin, it's not recorded it's not officially recorded. There's no receipts, di ba? So that's why it might look even worse than the situation appears. That's the good thing. So that's probably what drove the market a bit higher, even if we fell, right? But the problem is what's happening now. Now we've come up from around 6.3 or back to 5.8, and there's a lot that's happening. One is in the US, we're going to have the election. Okay. Second is, again, what's going to be happening after September? Are we going to be locked down? Is it going to be stricter? I guess everyone's a bit concerned. And I think if you consider how everyone is behaving in March and April, I think a lot of people are optimistic that this would be well over by June, but it's persisting. I guess what is going to be happening to the Philippines? What type of recovery? And I think we're using a lot of the letters in the alphabet to distinguish. You have a V shape, you have a U shape, you have a W shape, and an L shape uh, type of recovery. Right now, it seems we're not going to be having a V-shaped recovery because we've been in this pandemic longer than we should have. The question is it going to be a U, W, or L shape? Right now, I think it's turning out it's going to be more of a U or an L shape because we don't have a vaccine yet, and things haven't really progressed. The number of cases have been skyrocketing, and we haven't been able to move or transition quickly to more looser type of restrictions. Right? There's still curfew. It's really hard to travel. So probably it's shaping that way, and that's why I think the market is, losing some of its gains that it's made over the last few weeks.
One of the reasons also that it's been dropping, funds have been really going out of the market, especially foreign funds, and a lot of them have been going to US markets. You mentioned about the US election. Who do you think will be a bit friendlier to our markets? Will it be Trump still because of them, all of the stimulus that they've been given, or will it be Biden?
It's a bit of a tough call, but I think the safer bet would actually be for the Republican Party. Even though Trump uses a very aggressive style of negotiating, they're actually, I guess, are more receptive to what's happening between China. The fairness with regards to trade, they're actually more open. Probably because it helps that President Trump is also a businessman. But I guess it's more of just maintaining the status quo for now. There's also a bit of a problem as to what's going to happen with Ginsburg's passing now. Who is the president going to appoint afterwards? So I think probably in terms of just maintaining the direction, probably the Republican Party makes a better sense for the markets. This is just take it with a grain of salt because again, we don't know how exactly if Joe Biden wins, how is he going to be handling diplomacy, public policy, of course, business with the other economies.
Our economy is hit because we're pretty much consumption driven, and that's why we contracted because literally April 90% of the economy was closed down. Even if you wanted to work, you couldn't work. There wasn't even transportation. As we start to open up, people are expecting that the third and the fourth quarter GDP will be at least better than Q2 2020 GDP. Given that people are expecting it to be better, is there a percentage that if we get this, aakyat tayo, or if we get this, kahit mababa pa rin siya, it may be a deterrent for people to stay away from our work markets even more?
Well, at least our house call is that the third quarter looks to be better than the second quarter because the second quarter was really the peak of the lockdowns. The next quarter is actually going to be very crucial, and this could determine whether the index can climb or might even further erode. We've been in lockdown for 6 months, and I think a lot of people are just really getting by, meaning they're using up their savings. Again, they're turning into informal businesses. So how does that affect the fourth quarter growth moving forward? Well, obviously, that's when traditionally a lot of the spending comes in. You have your 13th month pay. You're going to be buying gifts. You're going to these parties, for example. But we might not see any of that during the fourth quarter, and that's why I'm worrisome about how that's going to transition now. And I think it's really critical that the progress of the vaccine reaches close to the stage 4 or for commercial production by then. Because if there's no signs that the vaccine is close, if people have their 13th month, they're probably not going to be spending. There was an article from Finder.com that says a lot of people are already not planning to be having any big. I think 50% are going to be spending less than they would have from their income. Probably if you have your 13th month and you're not sure about what's going to happen, or you don't have any job security, you're going to be saving it as well. So that's why I think it's really critical because even businesses who are trying their best to keep afloat, they're under the assumption that there's going to be a vaccine soon. But what happens in January, February? Will they have enough cash to pay their employees, they might have to close shop. So that's why I think it's very critical for the fourth quarter to perform better, and there's going to be hopes of a recovery soon.
I think it's not just that. It's just really the priorities also have shifted. I don't need that suit because I'm not going out. I don't need that expensive bag because no one will actually see it kung nasa bahay lang din ako. When you start analyzing stocks, what are you looking at right now? What are the parameters that you're looking at, given that prior to all of this, people were looking at earnings growth? How big are their earnings? How consistent are they? A majority of the companies right now either have lost a lot of money or their earnings, although their earning is significantly lower than 2019.
First, there's several things I'd be looking at. One is, how are they consolidating? Are they slashing their capital budget? So we've seen the capex come down as the likes of the property companies especially. Second is, are they also reducing their debt? This pandemic is giving Philippine firms a headache because remember, we were in the era of cheap borrowing, and now debt might be piling. And of course, the cost of borrowing is going to be much more. Third, I would look at, this is pretty obvious, check if the company is buying back their shares. Maybe they believe that they're going to be recovering soon, or the shares are firmly undervalued. And see these, a lot of companies are still ongoing with them. So there must be some signaling as to why they're buying back during this pandemic. We've seen the likes of big firms such as Robinson's Retail or AGI be buying back, even Axelum or Brown. So there must be sending a signal to these same potential shareholders that, well, we think we're going to use this opportunity to be loading up on our stock. The fourth one I'd also be looking at is the cash dividend declaration. Do they have enough retained earnings to be declaring it? Have they been slashing it, for example? The normal index constituents that have been declaring, such as Globin, PLDT, even Meralco, which were defensive plays, has it really gone down as much? And do you think afterwards it's going to be recovering? So I would be looking at those metrics right now just to see where I'd be positioning my investments for the next few months or even 12 months.
Would you want companies to at least maintain their dividends, or would it be better off na even if they're earning the same still, slash it na lang so at least they have a larger stockpile of cash that can give them a larger buffer?
It depends on which company. For example, these conglomerates, they're dependent on the cash dividend by the sister companies that are being paid. No? For example, the likes of MPI, which I think needs the investments to invest in the ongoing projects with the roads and the tollways. They are dependent on the cash dividend of Meralco and Maynilad. Of course, Maynilad isn't listed to be paying them. And I think since Maynilad and Meralco are still faring much better than others, they can afford to pay it. And that's why I would like to still see them being paid to not just the shareholders, but to the holding company as well. For the others that really need to conserve it, probably, let's say, the property companies, I would think, because, again, they can maintain the supply, right? I don't think they have to be hurrying because, again, it's going to be a seller's market. Probably they should be conserving or just be very selective on how they're going to be their acquisitions moving forward.
You mentioned about the property sector. No, I'm so curious about your take on this. That it became so bullish because also of POGOs, and we've seen it over the past 6 months, brought about by so many factors. POGOs have been pulling out one by one, but not just that. I've seen companies also start to scale down their rent, meaning dati 5 floors sila ngayon. Kaya pala natin 40% work from home, and then we'll just rent out half of what we're renting. How big of an impact do you think this will be for the property sector, not just for 2020, but for 21, 22, as people start adapting to work from home and we see lesser POGOs start to come in also?
It's obvious, I think, that the property sector in the Philippines, in terms of how they're going to, the landscape overall. Again, as you mentioned, there's work from home. So I think this is going to be coming into play and how the property companies are going to be strategizing. Obviously, perhaps the big concentrations such as Makati, BGC, Ortigas, won't be the hotspots they were. And if people become used to working from home, probably I think the property companies moving forward are going to be targeting those areas outside of those hotspots. If they can actually work from home from the province, from Cavite, Laguna, probably they're going to be looking outside, right? Especially even if from a few years from now, when the airport supposedly in Bulacan will be operational, the subway is going to be there, they're probably going to be looking outside at this point. And that's where the development is going to be. Now, the question also becomes just what happens to malls. Will it change in nature? I think it's a bit too early to tell. Some say that, well, we're still going to be a mall-going type of economy regardless of what happens once we go back to normal. The other thing is the people, my preferences might change, and it has probably influenced them. I think it's too early. So I think there's going to be a backup as to maybe converting these malls BPOs. Obviously, the structure has changed. When the retail format used to be mostly shops, for example, around 80%. Now it's gone down. It's now malls have been sought after for dining in. So obviously, the landscape is going to be changed, and I think it's going to be interesting how these property developers are going to adapt moving forward.
Anything that people can at least look forward to based on everything that we're seeing? You also mentioned that we've been in a lockdown for six months already. What if they make measures less tighter? We go into MGCQ. Will that impact our markets? Or if we go tighter, how do you think it impacts the markets as well?
Obviously, if you make the restrictions tighter, that's going to put a chokehold on the economy, and I think that's going to be taken negatively. If you loosen the restrictions, I think short term, at least, you're going to see that the market could probably rebound. But I think there's a bit of a caveat as to afterwards what's going to happen after 2 or 3 weeks. Are we going to see cases spike, or have we already learned to manage the situation and be ready and further commit to loosening the lockdown restrictions? So that is what I would probably be watching and looking forward to. Maybe we've learned our lesson because back in July we saw the cases spike, and that's why all the medical professionals, they were banding together and asked for a bit of a reprieve to have the cases brought down. The problem I see right now is that there's a bit of concern because in Europe there's a surge. Maybe they handle it differently because I've heard anecdotally that people don't really wear masks. They've been freely socializing with the community, and they still have events. Probably we're going to be much stricter and more discerning on how we spend our time socializing.
If we will quantify sectors, or at least you will lump them up, which are the ones that you would look at or at least tell people, okay, these sectors, these are what you need to consider for the next 6 months. These sectors, stay away from them. They'll be laggards over the next 6 months to a year.
Well, the defensive ones, given like utilities, try to position as best you can when you get a good price. I think some people have been pushing for PLDT and Globe. Obviously, PLDT has run up, and now you're seeing it soften. I think it's fallen more than 100 pesos for the last 2 to 3 weeks. Now, Globe is sort of making its push right now. So try to get a good position with them. I think even if you are stuck with them or you didn't get at the best price possible, at least you have a fairly strong cash dividend. The same goes for Meralco as well. So with regard to utilities, maybe look at the power companies, because when things go back to normal, I think the theme is going to return that there's going to be some tightness in the energy market. Consumers it's really spread across where it's concentrated. Obviously, some are doing much better than others. Those that are probably specializing in essentials, I would look at those. Those that have also adapted already to the environment, no longer brick and mortar, but rather into deliveries. What is really interesting is what's going to be happening to banking and property. Because those are the ones that where banking, you're going to see a direct impact. Property is more of a lagging indicator as opposed to banking, which is the leading indicator. Probably be wary of those sectors for now and just monitor them day to day. The last one is probably look into construction, because the assumption is we have 18 months before it's the next presidential election. Hopefully early next year, when things are perceived to become much better, the government is going to be ramping up their spending efforts to help with infrastructure. That helps with businesses. It's going to create jobs. You've seen the likes of MPI, the cement firms such as Eagle, Holcim, and Cemex. You've seen that there's a bit of a recovery in those share prices. So I'd be looking at those as well moving into the next few months.
If you look at the PSEI, the index, since June this year, up until where we are right now, end of September, it's forming a descending triangle. Is this something that worries you, that this looks like a bit of a bearish formation? That if we don't hold the 5-4 level, we might even slide lower also.
It is actually a bit of concern now for me. We've been sideways for 6 months, obviously, and there's no immediate positive catalyst right now that's going to be driving the markets higher. And you can go about how we do our day-to-day in this type of environment. It's not sustainable. So we've been trading sideways, but if you notice, we've been trending down because, again, it can't happen forever. It has to go back to how it was before. Yes, I think we should be very critical of that. As I mentioned, there's going to be there has been a surge of cases in Europe. In the US, there's going to be the presidential debates in the next in the next month. We're going to see 3 series, and we're going to see the polling. Those are the things you're going to have to looking at, and that's why I think right now the sentiment is rather negative at this point.
Final words for people who are investing right now or who are a bit scared still based on what's going on.
I think at this point you have to take your time and don't be in a rush. I don't think FOMO applies at this juncture. The way I try to figure out if I'm really going to start positioning heavily in the market, I just ask my friends, my colleagues, how is business actually right now, especially if they're in different sectors. I don't see anyone mentioning that it's picking up. I'm not really rushing to get into the market. Obviously, that goes without saying that it's still rather cheap, but I think it's still possible to get it at a better price. Obviously, we're hoping that when it makes a turnaround next year, when we're chatting again, is that we're going to be laughing about it and talking about how we're able to get these companies at a fairly good price.
Thank you so much. But before we end, we're gonna do this fast talk. I'm gonna give you 2 options, then blurt out whatever comes to your mind first. Dividend investing, position trading.
Dividend investing.
Cut loss or hold?
Hold.
LeBron or Jordan?
Jordan.
Now or Dito?
Dito.
10 million pesos earning 10% or 1 million pesos earning 100%?
10 million earning 10%.
Own less than 5 stocks or own more than 10 stocks?
Own more than 10 stocks.
Fundamentally sound stocks but are not moving or basura stocks with momentum?
Fundamental stocks.
Love or money?
Money.
Okay. Big mansion in the province or penthouse unit in the city?
Penthouse in the city.
Success or significance?
Success.
Bitcoin or Ethereum?
Bitcoin.
100 million pesos doing what you love or 1 billion pesos hating what you're doing?
100 million doing what you love.
Okay. Thank you so much, Luis Limlingan, rockstar stock analyst. Thank you, and I hope you guys learned a lot from this. And if you guys have any questions, put them in the comment section. Then we'll try to make more videos on top of that as well. So thank you, everyone. I hope this video helps you trade well, trade strong, trade smart. Thank you also, Luis, for your time.
Thank you, Marv. Next time ulit.